From the trading desk of DailyForex.com, this is Christopher Lewis looking at the upcoming March 8th non-farm payroll Friday trading session. In front of you is the dollar yen pair. And as you know, as you should know at least, the dollar yen has been straight up, and pretty much anything with the last three letters of JPY involved in it has been straight up for several months now. We have had a significant move higher that has been pretty much parabolic. It's even more so in some other yen-related markets, but pretty parabolic in the dollar. Now we've gone sideways, and it appears that we are trying to break out again. This sideways action often happens after a parabolic move because nobody really wants to try to give up gains. Nobody wants to start shorting the market, etc., etc. What's interesting though is during the Thursday session, we went right up to the 95 handle and stopped. Ultimately, though, closing just below it and closing at the top of the candle. This to me suggests that we will break 95. With non farm payroll coming, it could be the announcement that causes that. This market does tend to be greatly sensitive to the non farm payroll numbers and tends to rally when they're good. So perhaps the market is expecting a good number. But this situation's a little bit different. And because of this, I'm actually hoping that we get a little bit of a pullback during the session because, quite frankly, this pair is completely changed its dynamics because the Bank of Japan is trying to kill the yen, essentially. If that's the case, any pullback should be met with buying. Everybody in the market knows this. There are no surprises. There are the knee jerk reaction traders who will try to sell this if it's a bad employment number, etc., etc. But that move shouldn't last that long, and I will be more than happy to buy early and buy often on signs of support. Ultimately, though, we could break above the 95 handle above, and I'd be a buyer of that as well on anything that of any length, maybe 4 hour candle above that. When you zoom out and you look at it from a weekly perspective, and you really have to zoom out, you can see that 95 does matter. Breaking 95, though, does open the door to 100. Could be a choppy road. I mean, after all, look at this ridiculous move we've made. But quite frankly, it looks like there's nowhere to go but up eventually. And on top of that, as you can see, the weekly candle from last week that was so supportive really just got broken to the upside on Thursday, which means we've pretty much just started the move higher. So again, 95 is a barrier, but it's one I think we can overcome, and a pullback just gives us more momentum to do so.